the week ahead. Today's discussion is as much about looking at the market as a day time frame trader as it is having an understanding of what is going on in the shorter term. First, the economic data continues to come in very strong. I see no indication from my limited experience that there is any real deterioration in the market. From a shorter term perspective, remember that the market always has to take care of current business first. Additionally, we continue to talk about the difficulties of being a day trader because of the randomness of the market. Israel's attack on Iran was another example of that randomness last night. When you look at the weekly bar, we are still one time framing higher. Now that can change very quickly next week. However, it's something that you want to focus on. If you look over on the left, you will see the daily bar. The daily bar, if you notice, was going up very, very narrow ranges. That was an indication that that was the laggard buyers in the market. Yesterday was one of the weakest days I've seen. Price-wise, it closed on the highs, but the actual day itself was exceptionally weak. If you look at the low for Thursday, Wednesday, Tuesday, and Monday, you will see that they are very close together. That was a correction waiting to happen. The laggards finally realized the market was going up. They got the market exceptionally long. Now, the next thing that a day trader has to deal with, and this was very confusing today to a lot of people, at least a couple people that I talked to. Overnight inventory was exceptionally short. If you have followed our work over the years, we know that approximately 75% of the time, there is a counter auction or a correction of overnight inventory. That correction from overnight inventory can be very misleading if you're only looking at price. The next observation that I made on Friday morning was that the market had a potential to gap lower. It was not able to hold that gap. The inability to hold the gap is one indication that the market wasn't as weak as price made it look. Traders were misled by the short covering. A lot of times the short covering misleads the momentum traders. The confidence, the next thing I look at is how much confidence was there in the market. If the market would have had high confidence, it would have broken and would have gone straight down and taken out the overnight low. It didn't even come close. So confidence was low. The market did take out several of those lows, but we didn't get substantial follow through. If you look at the highs along both the weekly bar and the most recent daily bar, there is no real indication of excess. Yes, there's been some liquidation, but there's no real indication of a nice solid excess high. As we come into next week, we are going to more than likely open within today's range or last week's range. First thing, show of weakness would be to open and find acceptance below last week's low. Failure to do that keeps some strength into the market. We rallied late today off the lows. So the question is, do we open within, below, or above today's low on Monday? The weakest possibility would be open below Friday's low or below today's low and continue lower. Opening about the center or well within today's range or Friday's range is a good indication that the market is seeking short-term balance. The most positive result would be for the market to open above today's range. Again, have a good week. I have no real bias on this market. There's a lot that can play out as a result of what is going on between Iran and Israel. Let the market do its talking. Thank you. Have a great week.